Okay, so we are in the process of creating GL accounts actually. So now we will see first what are the GL accounts we have created. Okay, see, in fact, during our discussions, we have demonstrated, or our purpose is to create 6 varieties of assets. In fact, 6 varieties of fixed assets. So, what are these 6 varieties? The first one is land. As per our discussion or demonstration, we have subdivided the entire fixed asset into 6 varieties. The first one is land, second one is building, third one is plant and machinery, fourth one is furniture and fixtures, fifth one is vehicles, and the last or final one, sixth one is capital work in progress. Okay, so this is the six varieties of fixed asset we are going to create. So therefore we need 6 numbers of GL accounts first, because on the balance sheet asset side you will find only one GL account in the trial balance, that is called building, right? Only one GL account in your trial balance, that is called building. So ultimately that will go to the asset side of the balance sheet. Similarly, land, plant and machinery, furniture and fixture, vehicles, capital work in progress, these are single GL account. But under this GL account there will be subsidiary ledgers, right? In the beginning of the class I have already repeated many times, again also I am repeating that this particular topic is based on subsidiary GL concept, right? Subsidiary GL concept, this topic is best, like your accounts payable and accounts receivable. So even if building is a single GL, but under that single GL we will create subsidiary ledgers of each and every building at different locations. Plant and machinery is a single GL, but it's not that there is a one machine. There can be several machines located at different places, and these are different asset registers. So these are nothing but subsidiary ledgers, right? So let us see how many GL accounts we have created under the fixed assets. See, 6 numbers of GL accounts we have created, right? So for land I have created freehold land, right? In case of simple land I have created freehold land, because there can be other alternatives of leasehold land also. Then building, plant and machinery, furniture and fixtures, motor vehicles, CWIP, right? So this 6 GL is a must. Whenever we are creating this GL, 6 numbers of GL, so let us click on the freehold land. So what is the new things here? The new things here is this one, reconciliation account type asset, right? A for asset. What are the various types of reconciliation account? Normally we know these 3 varieties. Another is there, but this particular reconciliation account is used for utility undertakings, for their billing collection, their billings or their receivables from consumers. Okay, so they are consumer receivables because they have huge numbers of individual customers or individual consumers, like distribution companies, electricity distribution, gas distribution. Okay, so these companies, they create many contract accounts. Each and every individual customer, they create contract account, and sum total of contract account is contract account receivable, like your sundry debtor. So this is also another kind of reconciliation account. But we know these 3 varieties. Vendor, customer we have already completed, and this is asset, right? Another thing we have to also do, tax category we have to put star, and posting without tax allowed, because this is a very flexible situation. Sometimes also you purchase a asset where there is input GST or like those things. So if that demonstration will be there, it will this particular GL account will be having no problem. Also without tax we can go for the demonstrations. So I am selecting again. So same thing I will use for rest. Rest means except CWIP. Let us click on save. So do all these things for these varieties. Fine. Okay. We have created 6 varieties of GL in this site, including CWIP. Actually, CWIP is something which will not be purchased. So tax related information I never extended. So after this 6 varieties of GL in fixed asset, then we will go to the accumulated depreciations. Okay. In the accumulated depreciation, we will be having 4 varieties of accumulated depreciation. Why? Because accumulated depreciation is something which will be carried forward to the next year. Okay. So therefore, it needs separate identifications. That is the way things works. So accumulated depreciation will be exactly equal to with the assets which are subject to depreciation. So what are the assets subject to depreciation? Though we have created freehold land, the first asset, but it is not subject to depreciation. So we created the accumulated depreciation, the first one, that is your building, right? So I created this one. So again, if I go to the accumulated depreciation, mind it, this accumulated depreciation also to be created under subsidiary ledger concept. That means reconciliation account type also should be selected. Then this also. There is no information required for taxation related input or output tax in case of accumulated depreciation. So there is no question of selecting this. This is the third one. Okay. So this is the fourth one. So how many GL accounts we have created? 6 plus 4, that is 10. After creation of this accumulated depreciation GL accounts, then I will go to another GL, that is your asset sale. Asset sale, profit or loss on asset sale, asset scrapping, and actually profit on asset sale and loss on asset sale. I will create 2 GLs. One GL I will create sale of asset, which is a kind of other income, because that is not a normal sale in due course. So first I will create sale of asset. So sale of asset will come under the other income. Let us see. Yes, I have created another one. Sale of asset or asset sale. So this asset sale comes under the other income, right? Then I will go to the profit on sale of asset. Profit on sale of asset is also other income. Then I will go to the loss on sale of asset. Let us go to the admin. Okay. Loss on sale of asset, I don't think I have created. Let us see. Yes, loss on sale of asset I have already created. So asset sale, profit on asset sale, loss on asset sale I have already created. The next one is loss due to scrapping. Suppose I am just removing the asset from its location and throwing it to the scrap yard. So in this case, whatever loss arises by scrapping a particular asset, that loss has to be shown separately. That is not a sale, that is scrapping. It is immediately thrown to the scrap yard. Later on it will be sold. So at that time, whatever profit or loss will be there, profit will not be there obviously, loss will be there, and for that I am creating one GL account. Okay, so let us come to the next one. Which GL accounts I further need? Then the further GL account will be depreciation account, right? So I have created one accumulated depreciation, 4 varieties, but whenever depreciation is concerned, I will create only one. Why I will create one? Because this particular depreciation GL, it will not be having any opening balance. It is just used for the month end running of the depreciation, year end money, running of the depreciation. And this depreciation, the total amount will be charged to the profit and loss account. So whenever any depreciation will be charged, what will be the journal entry? Why depreciation account is only one GL, but accumulated depreciation are many GLs. Okay, so actually we will pass the entry like this: accumulated depreciation on, say, building, debit, say 25,000. Similarly, I will be having accumulated depreciation on accumulated depreciation, plant and machinery, it will be also like that, say 1,20,000. So it will go on. Furniture and fixture and vehicles. Actually there are 4 varieties of assets which are subject to depreciation, like accumulated depreciation, furniture and fixtures, say 12,000, and sorry, this is 1,20,000. This is 12,000, and say accumulated depreciation, motor vehicles, that is debit. Just a minute, I will just interchange. It will be credited, debit will be depreciation. Suppose vehicle, it will be 20,000. So all these things will be actually credit, because, and only one GL will be debited, that is depreciation. Okay, so this is the only one GL which will be debited, and all other GLs will be credited. And this particular GL depreciation, it is something which will be shown on the debit side of the profit and loss account, and all these 4 numbers of GL, it will be shown on the liability side of the, because these are balance sheet GLs. Okay, and this GL is profit and loss account type. That means this GL will ultimately submerged in the profit and loss account, and there will be no opening balances. But this GL will be carried forward, and next year when depreciation will be charged, then it will accumulate to this particular heads, right? It will go on accumulating in this particular heads. So technically these 4 numbers of GLs has to be identified separately, which is logically required, because separate identifications can show how much amount is built off, how much amount of accumulation happens monthly or yearly in different occasions or different periods. And whenever any asset is sold, then we pass this kinds of entry. Suppose, let us take an example. Let us take an sale of assets on revenue. There are two terms actually. One is sale of assets, assets sale with revenue, okay, and another is scrapping, okay. So scrapping is something where no revenue comes, right? Because we simply remove the asset and throw it in the scrap yard. So there is no revenue at all. But whenever asset is sold to a third party, to a particular party, the second hand asset or removed asset is sold to a party, then it earns certain revenue, okay. But any asset which is scrapped and sold to the throws to the scrap yard, immediately no revenue happens. So revenue happens when the scrap which is piled up in the scrap yard in regular intervals, those scrap the auction sale happens to those scraps. So in this case, what happened, there is a sale of asset and in that case some revenue is generated. But whenever a revenue is generated from the scrap, there is no question of any profit or loss, because anything which is scrapped, it doesn't contain any book value. Again, I am just saying this point and I will demonstrate in the example. Suppose scrap has no value when created. This is a very important point. Scrap has no value when created. However, it earns some income, that is other income. Because you know, in the financial accounting, the revenues or incomes are two types. One is normal revenue in course of business and another is other revenue. That means the income arises due to anything which is not connected with the main business or main operations. The purpose of the business, main purpose of the business. Apart from that, if there is ancillary some income comes without in regular nature, periodically or in infrequent intervals, then that is called your other income. That is the generation of the income, consistent income comes from those sources where the business deals. So those are normal income, simple income. But apart from that, anything is called other income. For example, if a manufacturing company is investing in certain shares or investing in certain bonds, okay, if interest earned after a period, within a certain period, at the time of account finalization, whatever income is earned, those are other incomes, because the purpose is not the investment. The company, the sole purpose of the company is manufacturing. So apart from manufacturing revenue, which is normal revenue or only incomes, those head is normal income or sale. Apart from that, other income also arises. However, sometimes the asset is, though the asset is discarded or removed, but it is sold to a customer. Whenever any asset is sold to a customer, we have to calculate profit or loss in sale of assets. Take an example. Suppose book value of assets, book value of the asset is say 2 lakhs. Okay. Accumulated depreciation. Accumulated depreciation till the date of sale is say 40,000, right? And sales price to be recovered sales price to be recovered from the party, say that is 1,80,000. Okay, 1,80,000. So in this case, obviously there is a profit, because on the date of the sale of the asset, what was the value? What was the value of the net asset? The value of the net asset is book value minus accumulated depreciation. So book value is the value which is shown in the books of accounts, and accumulated depreciation is something which is accumulating each year uh, when the asset is continuously used. So up to the date of sale, suppose the accumulated depreciation is 40,000. So on the date of sale, what is the net book value? Net book value is the book value minus accumulated depreciation till to date. So 2 lakhs minus 40 is equal to 1 lakh 60. However, we are selling the asset to a vendor, selling the asset to a party, to a customer on 1,80,000. So here there is a profit for the organization. So what happens? What entry I will write? Suppose this is to be recovered from a particular party. So whenever this is recovered from a particular party, I will write sundry debtors, say 1,80,000. Sorry, 1,80,000. And now I know that the value is 1,60,000, but we are going to recover 1,80,000. So whenever we are going to recover 1,80,000, then there is a profit of 20,000. So the value fetched is 20,000 more than the net book value. So there is a profit. So I pass one entry where I am putting profit on asset sale. Okay, profit on asset sale, this is credit, this is debit. So 20,000 is profit on asset sale. Whenever we are discarding a asset, then there is no point to keep these two GL accounts in our books of account. These two GL accounts we have to erase from our books of account. This the value of these two GL accounts, which is rolling, has to be erased. So how it will be erased? It will be erased by passing the see, this is the debit balance. How this will be erased? This will be erased by, say, suppose this is a machine, plant and machinery, sorry, this is my plant and machinery. It was showing debit balance. Now I have to remove it. So this is 2 lakhs. And accumulated depreciation, previously it was showing credit balance. So once the asset will be removed, then no more staying of this accumulated depreciation. So therefore accumulated depreciation account, accumulated depreciation on plant and machinery. So this will be debited, that is 40,000. Okay, so this two debit balances, that is 2,20,000, and this credit two credit balances, this is also 2,20,000. Okay, so that's why this is the entry which is to be passed. But this same entry, this particular kind of entry will be something else when you will sell the asset in it will the organization will scrap the asset. So whenever the asset is to be scrapped, for example, on the date of scrapping, say book value of the asset is 2 lakhs, accumulated depreciation is 40,000, and due to a accident in our organization, suppose that asset is of no use, there is no value of that asset, and it is better to throw the asset in the scrap yard, because if we repair the asset, then the cost will be more in comparison to the purchasing of a new asset with warranty period. So it is better to discard. The management wants to throw the asset in the scrap yard. So in this case, what will be the journal entry? Whenever is a asset is shown in the scrap yard, there is no question of Sunday debtor, right? So in this case, what happened? Only the asset value will be credited. This is 2 lakhs. 2 lakhs will be credited. So there is no point of accumulated depreciation. So accumulated depreciation, how it will be nullified? Only when it will be debited. And the differential is loss due to scrapping. This is also debit balance, that is 1,60,000, right? So therefore, my point is, I have to create, or we have to create, one loss on sale of asset, profit on sale of asset, as well as one GL account we should create, loss due to scrapping, right? So that is very important, and categorically it has to be created. So let us see our GL accounts. Again I am logging. Sorry. Okay, fine. So therefore, I have already created, in case of other income, I have created profit on sale of asset, and in case of loss on sale of asset, I have created loss on sale of asset, and loss due to scrapping. Okay, so these are the GL accounts I have created. Once I have created this GL account, then what is the next move? The next move is, I have to assign this GL accounts to automatic account assignment, right? I have to use it automatic account assignment, so that whenever the entry will happen, then automatic these GLs will automatically be populated. We don't have to go for manual posting, or we don't have to go for manual passing the entries relating to depreciation, accumulated depreciation, profit on sale of asset, loss on sale of asset. There is no manual interference. So this automatic account assignment is something which is required here. However, this automatic account assignment or integration of GL account with the asset account happens through your different parameters which are created previously, like your account determination. I have already told you that account determination, what I have created, that will decide which GL account will be debited or which GL account will be credited in which circumstances. So let us go to the automatic account assignment part, where my GL accounts will be used as per the different situations. So I will go to, most of the customization I have completed through this node, organizational structures. Now I will go to the integration with the general ledger, GL integration. So all these GLs I have created, then I will integrate this GL account with asset account determination. So here there is a clock button called assign GL accounts. While I click on the assign GL accounts, it will ask me specifically what is the name of your chart of depreciation. So it is 7200 undoubtedly. Okay. So once I click on the 7200, then this particular screen is coming. So under this screen, on the left hand side you see this is chart of account. Under the chart of account there is account determination. Under the account determination there are balance sheet account, depreciation account and special reserve account. So I will go to the first of all, I will click on this account determination. Before determination I have to select this one. Okay. So once I select that one, then I click on account determination. So here so many account determinations are coming, but let us go to ours. Okay, so this is our account determination. So we have to select the first account determination, that is land, right? Now after selection of the land, I will click on the balance sheet account, right? So this balance sheet account, here are the different fields where GL integration happens. So let us see. This heading is called acquisition account assignment. What is the meaning of acquisition account assignment? Acquisition means acquiring or owning a particular asset. So whenever you own a particular asset, that is the first step of using the asset. So whenever acquisition happens, which account will be debited? So it is asking. So this is what? This is your land related. So balance sheet account APC. Balance sheet account APC means asset procurement cost. So whenever a land is procured at the time of acquisition, which balance sheet account will be populated? Which GL account will be populated? Obviously the land account. So here I will come to this one. This is your plant and machinery. Okay, freehold land. So I am linking this 200, 300. 200, 300 is our land. So other these things, these are not required for our purpose. So let us come to the second one. Second one is loss made on asset retirement without revenue. So tell me one example when asset is retired without revenue. That means no revenue we are receiving, but the asset is retired. So this is the language of SAP, but you should be very clear that this is the scrapping of the asset. That means whenever an asset is declared as scrap, then obviously that asset is retired. There is no more used. But will it generate any revenue? No. It doesn't generate any revenue. It is simply thrown. So in that case, the GL account which is to be populated in this case of scrapping, we have to assign that GL account. Okay, so this is loss due to scrapping. Then it is asking clearing account revenue from the asset sale. Suppose we are selling a asset, okay, and some revenue is generated, and that is a clearing account, revenue from sale of asset. So revenue from asset sale, it is one other income, and for that purpose we have created asset sale account, right? Whenever asset is sold, there may be a chances of gain. So for that gain, which GL accounts I have used? Gain on asset sale. This one, profit on asset sale. And when there is a loss from asset sale, I have also created one GL account, that is loss on asset sale. So this one, right? So these are the GL accounts I am linking here. So once I am linking here, what will happen? Automatically in this types of circumstances, auto general ledger will be populated. Auto GL will be GL entry will be populated using this predefined GL account. So this is the way it things happens. Now I will click on save. System is slow. Don't care for the warning message, just click on save. Okay, so one account determination or one part is over, one varieties of asset. Then click on the next one. Okay, don't click on the next one. If you click, nothing will come. Let us go to the again account determination. One is over, that is your freehold land. So sorry, or that is your land. This was over actually. This was over. So let us come to another one. Another one is your building. So this one. So select this one, click on the balance sheet account. So here, whenever any building is purchased, okay, then what happens? This is automatically, this will hit to your building account. So whenever this will hit to your building account, automatically it will go to your 2,301,000. Similarly, whenever you are losing, loss made on asset retirement without revenue, scrapping. So whenever you will do the scrapping, then this one, loss due to scrapping, 400, 202, 203. Then clearing account revenue from the asset sale. So this will come from 3. So asset sale 300, 102. Then gain from asset sale 300, 103, I think. So 300, 103, profit on asset sale. Then come to the loss on asset sale. So whenever any loss is there due to the sale of asset, then 400, 202, right? So I'm just putting the balance sheet part. Balance sheet part means your freehold land or land, whenever there is a dealing in land, then what will be the impact on balance sheet? Then save it. Don't care for the warning message, save. Then again come to the account determination. So land is over, building is over. Then I will come to the plant and machinery. Select the plant and machinery account determination. Click on the balance sheet account. Whenever any plant and machinery will be procured, purchase directly. So in this case, which GL account it will have the impact. So for that purpose, we have already created the GL accounts. So this is the GL account we have created, 200, 302. Then loss made on asset retirement without revenue. So this is the loss. Then clearing account revenue from asset sale. So this one 300, 102. Then gain from asset sale 300, 103. Then loss from asset sale, then 400, 202, right? So this is relating to your automatic account assignment for the account determination, plant and machinery. Click on save. Okay. So I am just covering the balance sheet part. Then I will come to the depreciation part. So plant and machinery is over, land over, building over, plant and machinery is over. Then come to the F and F, furniture and fixtures. Balance sheet account. Whenever you are purchasing any furniture, what will happen? So in this case, it will directly go to the furniture account, furniture and fixtures GL. Loss made on asset retirement, this one. Clearing account, this is also, this is the unique GL accounts. Gain from asset sale, loss from asset sale. Okay, then click on save. So furniture and fixture is over. Then come to the account determination. After furniture and fixture, you will be having motor vehicles. Select. So whenever you will purchase the motor vehicle, which GL account will be debited? So in this case, we will be having this is planned. Okay, this one, motor vehicle. Similarly, loss made on asset retirement without revenue, then clearing account revenue, gain from asset sale, loss from asset sale. Click on save. Okay, now we will go to the next one. Next one is what? After vehicles, only one is left. Sorry, after furniture and fixture, only one is left, that is CWIP, capital work in progress. Just click on continue, right? Suppose we are purchasing directly a capital work in progress, the thing which is under progress, and after purchasing that, it may happens that we will complete it and use it. So whatever may be, once we purchase it in capital work in progress stage, half completion stage, any asset, then first of all it will be debited to capital work in progress account. Suppose before put to use, I sold it, and I suppose I scrap it, not sold it, I scrap it. No revenue will come and everything will be loss. Then if I sell it second hand, so this is the clearing account revenue. That means asset sale account. This is the gain on asset sale. This is the loss on asset sale. Then save it. Okay. So we have covered up to the balance sheet part of each and every individual assets, right? So what about the depreciation part? So again come to the account determination. First of all, depreciation. Land is not subject to depreciation, so we should exclude it. We can go for the balance sheet part, but not this folder, depreciation folder. So after land, then comes the turn of building. Select the building, click on the depreciation. Okay. So once click on the depreciation, there are many types of depreciation: ordinary depreciation, special depreciation, on plan depreciation. There are a lot of varieties, but we will always go to the ordinary depreciation, which are generated during the course of business. So here it is asking what is the accumulated depreciation account. So let us click on drop down. I have already told you that accumulated depreciation GLs are separate for different assets, but depreciation is the one GL. So it is asking what is the GL of accumulated depreciation, right? So whenever it is asking accumulated depreciation, this is the accumulated depreciation account I have created. Then it is asking expenses account for ordinary depreciation. Why it is asking, why the language is expenses account? Because this is a PL, profit and loss account type. So it is obviously one expenses account which will be demolished, which will be absorbed in the profit and loss account. So I will go to the 4. One GL account I have created, that is depreciation 400, 300, right? Other things I am not using. Then this is regarding building, so save it. Then I am coming to the again plant and machinery, selecting this, click on depreciation. This is accumulated depreciation GL. Okay, this is my plant and machinery. And depreciation, only a single GL, 400, 300, there is no varieties. Click on save. Okay, then I will again come. Plant and machinery is over. Then after plant and machinery, we will be having furniture and fixtures. Click on depreciation. Then I am coming to the accumulated depreciation for furniture and fixtures, this one, and expenses account 400, 300. Then click on save. Then come to the balance sheet type, sorry, account determination, the last one, that is my vehicles. Select the vehicles and click on the depreciation. For vehicles, I have created another GL for accumulated depreciation on vehicles, this one, and expenses account 400, 300. Click on save. Okay, so I have already assigned whatever GL accounts I have created in due course, because within this screen I have linked different GL accounts at which will work as automatic account determination in different places, in different occasions, right? So the GL accounts will be automatically populated. Then I will go for the document type and number range for depreciation posting. Suppose we are posting a depreciation, a journal entry will be created, but what is the document number? For keeping that entry, a document number range is required. So we know OBS 7 is the transaction code. In OBS 7 there is a document type, predefined document type called AF. So double click on AF by selecting. This is 05. So I will create a number range under the node 05. So this is 7200. Click on insert interval. Okay, node 05 is not there. Then click on insert line. This is 05 2022 fiscal year. So the last one is here 12,000. So 12,000 is the last one, and after 12,000 I will create. So let us create 12,0012 13,000. Click on save. Okay, so I have created one document type and number ranges for the purpose of posting. So this is created, and I have to select external checkbox here. Why I am creating external checkbox? Because once the depreciation will run, then automatically document number will be generated for different assets. So in this case, manually numbering is actually the number will be automatic, but it will be externally decided through the asset module. In the GL account, entry will be generated, but it will be externally controlled by asset accounting. One by one, different asset related depreciations will be posted. Okay, so that is the thing, through due to which accumulated depreciation number range will be external. Then I will go to specify intervals and posting rules. Normally we know, just click on save. Normally we know that depreciation, most of the cases depreciation is posted yearly once, but that is not the system. The organization which follows SAP, they have to specifically run the depreciation every month, right? So this customizing request will say or will decide what is the interval of the depreciation run. Obviously we will select the interval 1 month. So where to do this? Financial accounting new, asset accounting new. Then I will go to, let us see, intervals and posting date. No, this is not here. Valuations. No, this is also not. No, I have a transaction code, but I want to show it here itself. Okay, let us come through the depreciation. Okay. Actually, I'm not able to get the path. In fact, posting rules. Posting rules means post depreciation to the GL account. This is specified document type for posting depreciation. No issues. Posting depreciation. Okay. Specify intervals and posting rules. This one. Click on the clock button. Right. Then select the company code 7200. Select 7200. Click on the posting rules. Okay. So here now it is selected as monthly. Okay, monthly. So as it is selected monthly, then there is no issues at all. Okay. Then I will, posting interval is already showing in month, so there is no issues at all. Just click on save. Actually, this is also saved. Again, I am saving. Right. So this is the monthly posting. The rule is it should be posted at monthly basis. So now I will go to the next customization. Next customization is rounding rules. Whenever depreciation will be posted or any accounting entry will be there in asset accounting, there is n number of chances that if rounding rule will not be applied, then there will be fractions in many cases. So there is a customizing path where I have to configure the rounding rules. For that purpose, I will come to the valuation. I will come to amount specification. Okay. Then specify rounding of net book value. Specify rounding of net book value and depreciation. That means it will be applied to the depreciation as well as book value. Okay. So I'm not just carrying this messages, yellow message. Just click on continue. Then click on save. Then click on the company code 7200. Select this 7200. Click on the rounding specifications. Okay. I will select the rounding specification. I will select the automatically calculated depreciation. First thing. Second one is I will select arithmetic rounding. What is the arithmetic rounding? You know that if there will be 0.5 or more, it will be jumped to the next one, and if it is less than 0.5, then it will come to the round figure at downward, right? So that is arithmetic rounding, and I click on save in my request, right? So then we will go to the another customization, that is creation of depreciation key. So what is depreciation key? Let us understand. Depreciation key. See, in SAP, for calculating depreciation, we need two things: method of depreciation, second one is rate of depreciation, right? So what is method of depreciation? Like straight line, comma WDV. Okay, so these are the two very frequently used. So though we will decide straight line or WDV, but what is the rate? Suppose the rate is 12% straight line. Okay, that means every year 12% of the book value will be treated as the depreciation. Just a minute. There is a call from my side. There are different methods of depreciation, obviously, but only method is not sufficient. We also require rates. And nowadays, another way is after the new Companies Act in 2015, I think, then as per the Companies Act, life of assets determined, life of asset specified in Companies Act. So on the basis of the life of asset, we have to go for the straight line method of depreciation. That means total value, total book value divided by number of years of life, right? So this is the way the things works. And if there is a diminishing balance method, then we know that the depreciation will be calculated on the basis of diminishing balance. That means every year the depreciation rate will be applied on the opening balance of the same year. That means depreciation up to the last year will be deducted from the book value. Then on the same value it will be calculated. But there are, apart from these two, there are some standard practice. These are the very practical things actually. Standard practice in organizations. What are the standard practice? Let us take an example. Suppose in an organization there is a system. If assets purchased within first 6 months, then full year depreciation. Okay. Similarly, another organization, so this is a standard practice. These are the systems organization follows sometimes. So see, this chapter depreciation, this chapter asset accounting is used all over the world. So many organization, there are many principles. So if an asset purchased within the first 6 months, then full year depreciation. Suppose a asset is purchased in the last 6 months, of a year, last 6 months of a year, then in this case, suppose the organization has no depreciation, then no depreciation for that year. Okay, so in this case the first year full depreciation will be charged. But if the situation will be like this, then in the last 6 months, last 6 months means in Indian context, ours is 1st April to 31st March. So first 6 months means it will be within September, 30th September. Okay, and after 30th September up to 31st March, if something is purchased, then no depreciation will be charged in that year. Okay, so that was one kind of arrangement. So that arrangement can be accommodated in our asset accounting chapter also, demonstration also, and that is called period control. Okay. that is called period control. This particular thing is called period control. But in our demonstration, we will be very straightforward. We will calculate depreciation from the exact date it is put to you. It has no link with the first 6 months or last 6 months, whatever may be. But that can be possible through period control method, right? And here we will go for the calculation of depreciation key, and for depreciation key we will be having uh, 5 steps. The first step is define base method. Define base method. Sorry, define base method. Second one is define declining balance method. Then third one is define multi-level method. Then define period control method. Then finally we'll be having maintain depreciation keys. Okay, so these 5 steps, one by one we will proceed. The first step is define base method. So let us go to, okay, now again to log in. Sorry. Okay, so for finding out, for maintaining or customizing the base method, let us go to, actually we are not going to customize. Many methods are already there in the SAP system itself. If it is required, we will customize, otherwise we will use the same. But we should know the path. We will go to the SPRO, because it is Indian template, many things are already built in. Rate is ours, rate we will use, no issues. I will go to the financial accounting new, then I will go to the asset accounting, I will go to the depreciation, I will go to the valuation methods, right? Then under the valuation method I will go to the depreciation key, then under the depreciation key I will go to the calculation method. Here I will go to define base method, click on the base method, right? So under the base method there is a method called 0014, and this is the method we are going to use as the base method for our purpose. This is 0014, that is ordinary explicit percentage. Okay, so this is the method we are going to use, which is as per the country template. Similarly, let us go to the declining balance method. Similarly, in the declining balance method also, this second one, it is asking for the chart of depreciation. I will put 7200, right? Now this first one I am going to use 001. This is the declining balance method I am going to use for my purpose. Then I will come to the multi-level method. This one, define multi-level method. And multi-level method I will create it for myself. In the multi-level method I will click on the new entries button, and I am giving the name of the multiple level method as 72A. 72A. That is, I am giving it the name as say 5% straight line, right? See, 5% straight line means the asset will last for 20 years. Straight line. Then validity start date. I will select the validity start date as from the ordinary depreciation start date. That means the asset, when the asset will put to use, then it will be started from that date only. Then I will click on save in my request. Then I will click on the labels button. Then click on the new entries button. In the labels button, I will use acquisition year, say 9999. Actually, whenever I am creating a method, I will use it for indefinite period. That means in any year I will use this. Not that every year I will create this method. If 5% or 20 years life asset will be there, then automatically I will use this method. So I am using here 9999. That means once I will create it, it will be used up to the year 9999. Now it is 2023, but this method is valid up to 9999. Similarly, years, I am putting 999, maximum 3. Period, I am using 12. Then it is having the base, it is asking for the base value. Click on the drop down. Base value means the acquisition value. Then it is asking the percentage. I will be having 5%. Then enter and click on save. So then this is the way through which I will use the same way. Then I will come to the next one. I will come to the multi-level method. Okay, and this is the next entry. In the next entry, I will create 72B, and I am putting here say 10% WDV, written down value method, and here I will select from the ordinary depreciation start date and click on save. Then click on the labels folder and click on the new entries. And acquisition year, same way. This is same one, period 12. And here the base value, this will be different. This is previously, as it was straight line, I straightforward use 01, that is the acquisition value. But here I will use 24 net book value. Why? Because every year I will calculate the depreciation on the basis of the net book value, not acquisition value. So net book value, how it will be calculated? Net book value is the book value minus accumulated depreciation up to that period. So that is the net book value. So 10% depreciation will be calculated, no doubt, but it will be calculated on net book value. Then click on save. Okay, so this is the way I have created this. Then I will come to the period control method. Period control, I have already told you what is period control. So here in the period control, I will be having no such formalities. What is the formalities? That is up to 6 months or after 6 months. I will not that formalities. So I will use the period control method. See, I am just copying a period control method. I am giving it the name 72. Then here every time I am using 01. pro rata at period start date. So every time, even if retirement also same, always it will be calculated at pro rata basis. And description also, I am putting the description as 7200 period control. Okay, then click on enter and click on save. Okay, so this is the period control method I have created. There is no question of any assumptions or anything. Then I will.
Excuse me, sir.
Yes.
Sir, how it is different from the base method and the multi-level? Basically, multi-level, I believe it is useful life. Factoring the useful life or what?
See, let us go to the multi-level method. Now, in the multi-level method, what happens? I have created two things here. One is for the straight line, another is for the written down value. So in this straight line as well as written down value, I assigned some of the more parameters here. What is the more parameters? The parameter, actually these parameters are the extra thing which I have assigned here. The parameter is whatever method I will create, it will be used forever. And what is the value on which this thing will be applied. So I'm this in SAP terminology, this is called multi-level method, because this method is punched with some more parameters so that it will be workable. So here the percentage is given, as well as on this percentage, on which value this percentage will be applied, this is also decided on the labels. So this is called multi-level method for that purpose only. After creation of this, I will create or I will maintain the depreciation key. I have already told you that depreciation key consists of the method of type of depreciation, or as well as the method of depreciation, or as well as the rate of depreciation. So I will whenever I will create the depreciation key, I am coming to this and I click on the new entries button. Okay, in the new entries button I am creating a depreciation, say 721 72A, and I am putting the name as 5% straight line method, 5% straight line method. Okay. Then here in the period control, I will select period control according to fiscal year. Then depreciation to the day checkbox I will select. Okay. Then I will click on, simply I will click on save button. Okay, there is no page 18 for the depreciation key. One error message is coming. Let us click on continue. Okay, fine. So even if a red message is coming, that is also saved. So let us calculate the second one. Let us go to the second folder, assignment of calculation method. Then here I will, okay, page 1 is here. Click on the new entries. Okay, so without the first one, second one is not possible, but it is asking for the second one. So here it is asking depreciation type. See, page is mandatory here. That's why these things are coming in the first one. So first of all, depreciation type, I will select the first, I will select ordinary depreciation. Okay. Then second one, I will select the phase. Phase I will select from start of depreciation. Okay. Then base method I will select. I will select the base method. Okay,
zero one
base
four.
method 00014. This is the base method by default which is there. I am going to use. Then here I will, for declining balance, I will use, though declining balance will be decided here, but this is particularly for the straight line method only. But all the parameters will be selected, but finally it will work for the straight line method, but these are the mandatory fields I have to select. Similarly, period control. Period control I have created this one. In this case, no assumption is there. It will be exactly the date it will pick up, whether it is depreciation, whether it is discarding in scrap, whether it is sale, whatever may be. Then it is asking for the multi-level method. In the multi-level method I have to select this one, 72A. Okay, then in the class I will select straight line method of depreciation. Okay, then I will click on save, right? Then I will click on the back arrow. I am coming to the back arrow two times. Again I am coming here. Again I am coming here. Okay, I am coming here. See, this status is inactive. That means whenever I create a depreciation key, the status is creating as inactive. So though I have created, the depreciation key is not active. So select this key and there is a crackers button here. Click on the crackers. Once I click on the cracker, then automatically this will be shown as active. Now it is showing as active. Then click on save. Okay, then again I will click on the new entries button. Now I am creating the method second one. Second one is this is 5% straight line method. Second one I am creating 10% WDV, written down value, right? So period control, WDV, WDV method 10% WDV. Then period control according to fiscal year. Then depreciation to the day checkbox. Click on save. This message will come. Don't care for this message. Click on continue. Then click on the second folder and click on the new entries. Okay. So then I will come to the second one. Then it is asking the depreciation type. This is ordinary depreciation. Then it is asking for the phase from the startup depreciation. Then come to the base method. We know base method 0014 we always use. These are system defined. Then declining balance method also 0001. Then period control method, I have created my period control method. I have not depend on the mandatory things. Then multi-level method I have created here, that is specifically for the written down value 72B. Okay. Then class I will select declining balance depreciation and click on save. Once I save, I will just come back to the main screen. Okay, so this is the main screen. Again I will come. Again I will come. Okay, this is the main screen. This is inactive now. Select, click on activate, and click on save. Fine. So in the next class I will just cover up the subsequent things. I hope in the next class we will able to pass the entries. Okay, most of the customizations are over. So I will send the recording. Our next class will be on the next week.
Tuesday.
Yeah, on Tuesday. So good night to all of you, and I'm closing the session.